Hello and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today, on November 26, 2025, we're focusing on Intel Corporation, ticker Intel, which has been making some serious waves in the market. There's a lot of news to unpack, from optimistic analyst forecasts to major legal challenges, and we're going to connect it all to what we're seeing on the charts. First, let's talk about the headlines, because the recent surge in Intel's stock didn't happen in a vacuum. The stock rallied hard in the last couple of days, joining a broader tech rally after Goldman Sachs predicted a 25 basis point interest rate cut from the Federal Reserve in December. This is uniquely bullish for Intel because its IDM 2.0 strategy involves spending tens of billions on new factories, and lower interest rates drastically reduce the cost of financing these massive projects. This news has investors excited, helping the stock build on its already impressive 77% year-to-date gain, which was largely driven by its advancements in AI manufacturing. However, it's not all smooth sailing. Intel is simultaneously facing a serious industrial espionage lawsuit from its biggest rival, TSMC. A ruling against Intel could result in huge financial penalties and disrupt their technology development, representing a significant risk factor. Despite this legal pressure, the market seems to be prioritizing the macroeconomic tailwind of potential rate cuts, evidenced by the massive trading volume on the recent up move. Fundamentally, the bullish case was strengthened back on October 23, when Intel reported better-than-expected Q3 earnings, with revenue hitting $13.65 billion. The company also made strategic moves like selling a majority stake in its Altera division and lowering expense targets, signaling a strong focus on financial discipline that the market has rewarded. Now, let's see how all this news is reflected in the price action by jumping into the charts. Starting with the daily chart for the big picture, we can see the incredible journey Intel has been on over the past year and a half. There was a dramatic capitulation event in early August 2024, when the stock gapped down from the high 20s to near $21 on massive volume. Following that drop, the price spent months forming a bottom, eventually hitting a 52-week low of $17.665 on April 8, 2025. This $17.50 to $19 zone has now become a massive long-term support level for the stock. From that April low, the stock began a slow and steady recovery, building a solid base for its next move. The first explosive breakout occurred in mid-September, right around the time news broke about the Altera stake sale and cost-cutting initiatives. You can see the price rocketed from below $25 to over $30, showing a clear correlation between positive strategic news and investor buying pressure. The next major leg up happened following the strong Q3 earnings report on October 23. That news catalyst propelled the stock from the $37 level all the way to its 52-week high of $42.48 just a few days later. Since hitting that peak in late October, the stock has entered a healthy correction, pulling back and consolidating its gains. Now, let's zoom in on the most recent price action from this month to see how the current setup is forming. Looking at just November's price action on the daily chart, we can see the stock found support in the $33.50 to $34.50 range after its pullback from the highs. This area acted as a launchpad for the most recent surge we saw on November 24th and 25th. That move, directly tied to the rate cut news, pushed the price from a low of around $34.50 to yesterday's close of $35.83. This establishes a clear support zone around $34.50, with more significant support at $33.50. Immediate resistance is now the high of that recent move, right around the $36.15 level. Let's switch to the hourly chart to get a better look at the structure of this latest rally. On the 1-hour time frame, we can see the strength of the move on Monday and Tuesday with conviction. The stock pushed higher with strong volume, indicating institutional participation. After peaking just above $36, the price has begun to consolidate sideways, which is constructive price action. For shorter-term traders, a key level to watch here is around $35.50. This level was a minor peak during the ascent, and holding above it would be a sign of strength. A break below this level could signal that a deeper pullback is needed before the next leg up. Now for the day traders, let's quickly glance at the 15-minute chart. On the 15-minute chart, you can clearly see the consolidation range that has formed over the last several hours of trading. The price is coiling between roughly $35.50 and the highs around $36.13. This looks like a potential bullish flag or pennant pattern is forming. A high-volume breakout above the top of this range could trigger the next rally. Conversely, a failure and breakdown below the range's support could lead to a quick drop to test lower levels we identified on the hourly chart. Let's go back to the daily chart to wrap this all up. So, to summarize everything, let's recap the key price levels we're watching. Major long-term support remains at the $17.50 to $19 zone. More recently, we have a key support area between $33.50 and $34.50. Short-term support sits around $35.50. On the upside, immediate resistance is at the recent high of $36.15. The main target for bulls will be a retest of the 52-week high at $42.48. So what's our outlook? The bullish case, which I see as having about a 65% probability, is driven by the powerful narrative of impending Fed rate cuts, which directly benefits Intel's capital-heavy growth strategy. This is supported by solid earnings and strategic restructuring. If the stock can break and hold above $36.15, a move toward $38 and then $40 seems likely, with an eventual retest of the $42.48 high. This scenario would be reinforced by continued dovish commentary from the Fed and overall strength in the tech sector. The bearish case, with about a 35% probability, hinges on two main risks: a negative outcome from the TSMC lawsuit or a hawkish surprise from the Fed. If the market sentiment shifts, a break below the key support at $33.50 would be a major warning sign. Such a breakdown could open the door for a deeper correction back towards the $30 level, which was the breakout point from September. Things to watch for are any updates on the TSMC litigation and, most importantly, the Federal Reserve's meeting and announcement in December. That concludes our analysis of Intel. Remember, this is not financial advice, and you should always conduct your own research before making any investment decisions. Thanks for watching Explain the Charts, and we'll see you in the next video.